Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risk. I will start with my prediction. I believe Intel will outperform the market over the next 5 years. Let's jump in. Intel is best known for its CPUs, the brains inside most PCs and servers, but it's more than just chips. Today, Intel operates in three core segments: client computing, which is CPUs for the desktops and laptops market, data centers and AI, which are server and AI accelerators, and Intel Foundry Services, which is its contract chip manufacturing business. They make money by designing, manufacturing, and selling silicon products, plus advanced packaging solution services, which is an extremely crucial step of chip manufacturing. Now, with the business laid out, let's dive into why bulls are excited. At the April 2025 Foundry Direct Connect, Intel debuted its 14A process node with real customer test chips and a rollout of its 18A solution. That means tangible traction in the contract manufacturing business. Second is AI accelerator shipments. Intel's Gaudi 3 is already live on IBM Cloud, offering a cost-effective alternative to NVIDIA's H100. It's an early sign that they can still ship competitive AI chips and build relationships with hyperscalers. Next is leadership and cost focus. The new CEO, Lee Bhutan, which is the former Cadence executive, flattened Intel's bureaucracy. A leaner org means faster decision making and potentially better margins. Finally is macro tailwinds, with onshore semiconductor incentives rising and Asian tariffs putting pressure on competitors. Intel has a policy-driven push. But it's not all smooth sailing. Here are the clouds on the horizon. First is just product delays, which includes execution risk. Key server CPUs like Clearwater Forest slipped into 2026, and Intel canceled its Falcon Shore GPUs as well. Now, there is weak AI PC demand at the moment. Consumers have largely stuck with cheaper Raptor Lake chips instead of Intel's premium AI PC Lunar Lake sales. Next is the balance sheet. Heavy foundry investments needs and weak free cash flow generation in a rising or high rate environment is not something you want to see. And finally is intense competition from players like Nvidia and AMD in the AI accelerator and AMD in the CPU market. You also have ARM-based server CPUs threatening x86 dominance. But despite these headwinds, it is prediction time. I see Intel as a true coin flip, but I'm leaning bullish. If they nail the 18A ramp and secure external foundry tapeouts, Intel could deliver 15% annualized return over the next 5 years. On the flip side, another process node slip or macro downturns could swamp gains and push returns below 5% annually. To recap, Intel's business model hinges on CPUs, AI accelerators, and foundry services. Their biggest growth opportunity is the contract manufacturing pivot, and their main risk are execution missteps and fierce competition. My bold call: I'm baking on at least 15% annualized return through 2029, though prepare for choppy waters along the way. At the Motley Fool, your comments make us smarter. Please comment with your own research and insight about Intel and tell us what stock you want to see Crunch Time tackle next. Visit fool.com/invest to receive the top 10 best stocks to buy now.